Good morning. Can you believe half the year is over? Where the hell did it go? Wow. Crazy. Pretty soon it'll be Thanksgiving. For real. They're coming too fast. All right. Well, the end of the first half, and historically, they're not going to give back much here. Institutions don't want to sell after a little run like this. If anything, it should be minimal. We'll see what happens when we get into the second half. But what's today's date, by the way? That's the 30th, of course. Why am I asking? But the other historical or seasonality cycle, supposedly, how accurate it is month to month, is that the end of the month and the beginning of the month are supposed to be overall bullish inflows of money, coming in and being put to work. So the theoretical there is that even though, we see SPX up several days in a row, that doesn't support that so much into next week, that it would continue to rally. What would change that? Well, what would change that would be a correction bar. Yeah, window dressing. Yeah. So, and window dressing is okay. What is done well, and funds that don't own those stocks that have done well, relative strength, what we're going to be talking about today in MT Live, they buy them to show them, hey, like we own the winners. They were part of. But so those are individual stocks that could continue to do well. But look, things that move up over the course of multiple days, and here we see the momentum in SPX having slowed yesterday. We've got this small topping tail and just a tiny little candle body. So at MT, we read candles, not, without names, but by momentum. And just simply, it's like big green candles say upward momentum, and big red candles say downward momentum. Now, do they come after multiple bars down, or do they come after multiple bars down in a reversal? So one candle has to be put in the context of support, resistance, trend, multiple time frames, relative strength, weakness, so on and so forth. So this candle tells us that momentum is slowing, and it's at a whole number of 4,300. So kind of like strike two for a continuation going into next week of a continued strong rally. Now, what could technically, based on the charts, what could change that? Well, what could change that could be a correction bar. So what is that? Well, those of you that are in the room or taking classes, you know what a correction bar is, or an MT Live. We talk about that. And that would be, let's just assume that I can get this thing right, that today, for whatever reason, did something like that. And now it's 3 o'clock. And at 3 o'clock, all of a sudden that bar turns into I'm trying to be an artist here, which I suck at. Turns into that. Now I am thinking that's possible, because it attempted to go down and it came right back up. So intraday, what we would be looking for, let's say at 2:30 or 3 o'clock, even on a 5-minute chart, would be a pattern something like that. Prices go lower and they reach some level and they begin to bottom out, and rally mode that creates a bottoming tail bar or a correction bar. Right? Now, if I said, well, what would make it even better? What would make it even better would be some real pain that took out, that at least that bar and maybe the other one. And so, a big one, big rally, which, next week in all likelihood would lead to, another inside day. And that would just be amazing. So we don't know what's going to happen. But as we look at charts and we start thinking, okay, this should pull back. It isn't an uptrend. Do I really want to be short something in an uptrend that's short? Intraday, yeah, why not? If I get that kind of a pattern from a swing trading perspective, not without giving it a lot of room, and you're trading against the trend. So 4,300, big number, big open interest there. And so look, if it sprung down and came back up again and it started taking that out, those big option open interest could fuel that rally as well into next week, because the majority of those options don't expire until, I don't know, whatever date, middle of next month, somewhere in there, the second week or whatever. So let's keep that in mind. And what else we go with here? SPX. So you got to get pretty close, right, for the call side, which, I don't know how comfortable you want to be, but, it got rejected from there. You'd have to go to 43.10, right? Up to you. Now, on the downside, the premiums are relatively big, all the way down to 42.50, where there's a huge open interest. And let me just go back and look here. Yeah, it's like 70 by 85 right now. So you can go under 43.50, right? And so these option market makers, take this with a grain of salt, so to speak, because they're not really criminals, but in a sense, they're criminals. It's like they adjust these options, or they adjust spreads, to obviously put it in their advantage versus being, hey, you know what? This is why I like futures. The spread stays the same all day long, right? I don't think there's even there's no market makers involved. We're just trading amongst ourselves and, institutions. And so, the spreads stay the same. I think it's, I'll call it honest market as far as that goes. You can bid, you can ask, Forex, that's a criminal market. All the brokers are there lined up, trading against your orders. Spreads are different. You can't bid, you can't offer. That's a criminal market. Right? So why the hell would I want to trade the euro in Forex when I could do it with futures? Right? Anyway, so just looking at this is the kind of pattern that would suggest a pullback, a run up, multiple days. It's got gaps underneath it, and looking for, this to either, be quiet or pull back here. If it, I've said multiple times this week, the first reference point of support is a prior day's low. So hasn't broken a prior day's low since the bottom. But now, as the momentum slows down and the ranges contract, prior day's low isn't too hard to take out. And once it takes it out, well, what happens from there? Factory work. All right. So there you have it. You can go all the way down here, which on the surface, we always look at things as what is now. And then we adjust it as to, what comes the now, right? In the moment. What we saw at the time of the trade becomes the past. And, human nature, once we risk our money, the past becomes our reality, and which it shouldn't, versus, the present. And that's what gets us in trouble, when things aren't going our way and we rationalize. All right. So where are the futures now? Breaking a prior day's low. We've got a red bar here. And look at that nice little sell setup right there. Mm-hmm. Right. In coaching last night, we talked about this. What makes a setup a higher probability setup? This is what we talked about: one bar versus multiple bars and individual candles. And, it was a really great session. So we've got this weakness pre-market. It rallied up in here, got this retest. It looks like it can keep going down. And if this continues to follow through, as far as SPX goes, well, maybe it follows through down here. Right? And, that 4240 comes out to be, a pretty chunky number. And maybe you want to even go down below that once the premiums increase. So you can see if this actually drops with some momentum to the downside, those lower numbers will get increased. And you could have what we always look for with SPX, being a no-brainer. We always look at everything. Right? We want it to be a no-brainer trade, but we look at the pattern and we say, it's pretty far away. And if we were to get a drop, say down to this level here, where this blue line is, where there's this congestion, and all of a sudden this premium down here, should be a no-brainer. Right, so disclaimer, no-brainer doesn't mean guarantee. All right, other markets. Dow led the way up, right? Because it led the way down. Monster reversal bar, which is supportive of a bias that prices should not go down there. It doesn't mean they can't, but it should not. What should happen here is that if this pulls back, it should attempt to make a higher low. But this pattern is kind of weird, the break, the rally, the rounding top, the break, monster, green bar up. Now it's at resistance, obvious place where there's sellers, Read the bottom. If this is your first time in the room or you're on YouTube, read the bottom. Right? It's there every day. You don't need trend lines, fib lines, VWAPs, and other fine tools. Just look to the left. Look to the left. Right? There's probably services out there that are promoting proprietary numbers, fib symmetry, Elliott waves, Gann this or that, indicators, brain damage. And all you got to do is look to the left. Some of you probably get sick of me hearing say that, but there's just so much junk out there in this industry, and it's the way it is. Anyway, Qs, monster move. And look, double bottom, wide range bar, red bar ignored, bullish price action. Again, momentum is slowing down, right? So pullback, yeah, should pull back. It's had a run. Why not? Sideways, it's just suggestive, multiple weeks up. Things rest, and when they start to rest, what do? Well, this one pulled back pretty sharp. This one pulled back, after making a slight new high. But now this one went about vertical with a couple of bars. That was powerful. This was relatively bullish type of pullback. And now, you've got this move. So I think after next week, if that window dressing follow through, beginning of the month, end of the month follows through, I guess, things would hold up. And then I think it just makes sense for some kind of correction, sideways or down. And please keep up the reminders. Look to the left. Sure, Dave. I mean, get a Post-it note and stick it on your monitor. Russell. I still haven't fixed this. I guess they're not going to. But here, topping tail, double pivots. Well, suggests lower to me. Now, the depth of retracement here was a positive. Well, The depth of retracement here was a positive, but it pulled back hard. The depth of retracement here to here was a positive, and it pulled back hard. And this Russell, has just been a mess all year long. And one of the things that we'll be looking for, well, with the Russell here is, if we get this corrective price action, is does it stay? Because it stay, any correction, does it stay up here now? Because this market has been going sideways all year. It's resting. Now, which way is it going to go? Well, that big green bar and this so far at the top of the range says up. And this is, it was a huge move last year, but this could be, the second half a monster move, a continuation pattern. So this is definitely something you want to keep your eye on. And on the daily chart, if this shows some relative strength, assuming, let's say we get some kind of correction into July, okay, and the Qs pull back because they moved the most, and the Russell just hangs up here, I think that's going to be the place to be in the second half of the year. I think so, Joe. I mean, look, everything we do is based on common sense. It's not based. Sometimes we have to have an opinion once the chart tells us think this way. There are many out there that they come out with opinions as if they have some insight into the future, like a wizard. Well, we just look at the charts and say, look, this has gone sideways for a year. It's underperformed technology. Right? It outperformed. So it rested, but it rested sideways all year. Now, if this consolidation can resolve itself to the upside, this, right, common sense says that it should pick up the lead. So that's something we should be looking for and will be into the second half of the year. And oil. Let's go back here. Oil. Right? It just doesn't stop. It's at resistance. The momentum is slowed, and it's up until it's not. And major support. It's consolidating at the top of the wide range bar. It says it's going to go higher. And gold tried to go up this day, it didn't, and it looks like it's going to go lower. One of the things to watch here is if this day closes like this as an inside day, it may be a bear trap. Since it broke this low here, wide range bar, should be a 1, 2, 3 lower, but it could, if it takes out the high of the inside bar, would be a breakdown bar failure, right in the course. And so you want to, if it is an inside bar today, meaning it doesn't drop, set an alert there. And it might just be something that perks up there. Maybe. We'll see. Right? We're going to be watching. Right now, the euro is coming down here. So for a gold trade, right, you want to see that euro move back up because we want to see the dollar, which is showing strength, and it doesn't give us any reason to think it's going to pull back. But just based on that intermarket analysis, we would want to see the dollar pull back a bit, which would, reverse the euro, and then the gold trade, those things coming together could make, a swing gold trade. But we'll see what happens there. Silver, similar type of a pattern. It didn't break the low, but it's basically right there. And the uglies, but we're going to watch to see if this thing rolls. We've got all of those, they call the opening trades. So all those cruise ships and airlines look god awful. So I don't know. You would think. I mean, they kind of led up. anticipation of that. And now we see, oh, United's ordering planes and, this bullish news that's coming out. And, maybe it is, but a lot of those cruise ships and airlines just look pretty terrible. But maybe they bring up the rear in the second half. So we'll see. That's it from me. I think, oh, Bitcoin started out well and gave it back. And well, we'll see. It's part of the bottoming process. They look like they're ready to make another monster move, and then they disappoint, and then they start over again. A lot of stops and starts. Just look at marijuana this year, which maybe it's the second half of the year. With this long big consolidation, set an alert up there above that red bar, right? And so we'll see. All yours, Dan.
Yeah, exactly. I was thinking marijuana when you were looking at Bitcoin there. You did a great coaching last night talking about starting off bottoming patterns and all, and I did that seminar last weekend, and we looked at Bitcoin, and there's nothing wrong with saying I don't know, and that was my conclusion on Bitcoin. It's a definite watch, but I don't know, and we're taking it day by day. All right, all our opens are fine. If you have any questions, holler at me. We're talking about Bitcoin. Yeah, we bought this. Today's what, Wednesday? So Tuesday, yes, no brainer trade right there. We got the benefit of the gap in the rally yesterday, gapping down a little bit. So we sold our long. We still have a put spread for Friday. Roku scalp. No, thanks, Joe. Roku for a top fishing scalp. I'm not sure what if top fishing means you want to short it because it's extended. Very possible. I see it gapping down here under this little 15-minute pivot. So I would say put it in a thumbnail, maybe 15-minute low, timed with a weak market, then very possible. We sold Airbnb call spreads yesterday, and I'm just noticing here pre-market, nice bearish continuation here on the 15-minute. Now this also, Airbnb looks like a great day trade short. Look, could not bounce into the close and then closed at the low, tried to bounce pre-market. So 10-minute low, there's a short idea. Thomas plug and tan. Plug, we actually shorted. We were short a put spread under this WRB. And I think it's the long term, daily, weekly, monthly. This is the area. So even for a day trade, I like the gap up here. So that's not bad at all. In fact, I'll put that in a little window. And we talking about Bitcoin again. Coin had a very nice move also 2 days ago. Look at that volume. So we did a put spread on that, coming in here a little bit. It's actually gapping under yesterday's low. If we were to get some type of bullish retest, then let's keep an eye on that as a core long. That looks good. Thomas asking about TAN. We actually closed ours yesterday. This wide range bar and one final push of greater than 100% retracement. I have no idea what you're asking of me right now. If you're, the only thing I could say is day trade short. It's gapping down here a little bit. You got a big old price void. But swing, I have no interest in that. Popo STX. Fubo. STX. Yeah, yeah. That's a short-term bottom with a price void. So that looks good. Gapping up. Put that on the list. Fubo and Pelletier. Fubo, I'm not sure what you're asking. It was a little breakout failure, weak close, downtrend 15-minute. So day trade looks lower. I'm gonna put STX in here. And Pelletier. Pelletier, yeah, see, again, it would help if you guys and gals told me what you're looking at because nothing's jumping out at me. Had a breakout, bearish engulfing, downtrend on the 15-minute chart, maybe 15-minute low, day trade short, but I would prefer a bigger price void and something weaker like Airbnb. NEO, we have a put spread. I see that up here this morning. That looks good. EBIR for Norbert. Yeah, that's there. There you go. There's a multi-month bottoming pattern. See, I like when they big price void like this, when the 20 MA flattens out and it gets above it, and then you have some type of event bar. So the event bar right now, Norbert, is red bar ignored. So over yesterday's high, I like that. So let me set an alarm myself. On bottom right on PRU from yesterday. Debbie was eyeing that out. All right, so yesterday's high, 27.21. I'll set an alarm at 27.15. NEO up alarm, that's good. Oh, Aver just hit already. Yeah, no, Aver looks great. It's only 9:31 though, is the problem. But I'd say 5-minute high. 5-minute high, you can buy this, stop yesterday's low. I just do not like myself trading the first 5 minutes, but unless you just have a bullish gap trade like this, a bullish pre-market, it's just a matter of aggressiveness. That's all. But I'm going to give this 5-minute high, stop yesterday's low.
Q's the weakest. I think that tech is going to see some distribution. Everything just wiggling around here for the moment. They look like they were going to roll over and rip right back up, except for the NASDAQ futures, but nothing of great significance, just a mess so far.
BGFV. BGFV was from yesterday.